And if you observe the last two precious metals bull markets that I've lived through, 1970 to 1981, 2000 to 2011, what you will note, among other things, is that those bull markets are led by gold because the fear buyers first.
And they want to know, what is the ideal gold to silver ratio to have in their portfolio?
All investors want one size fits all answers, and there aren't any. It depends on the investor. Traditionally, gold bullion it's been a form of insurance, Shay. You have preserved your purchasing power in circumstances where the purchasing power in other savings and investment classes gets degraded. So you would buy gold if you believed that the purchasing power of the Australian dollar was going to decline and the value of your savings products, your super, your bank deposits, your bonds was going to decrease. Silver has traditionally been something different. Silver has been more of an investment or a speculation than an insurance product. And if you observe the last two precious metals bull markets that I've lived through, 1970 to 1981, 2000 to 2011, what you will note, among other things, is that those bull markets are led by gold because the fear buyers first. But leadership changes in the middle of those bull markets when the momentum established by gold puts the value of the narrative firmly in the generalist mind. Then silver starts to move. It moves both because its lower unit value allows poorer participants, as an example, the Indian peasantry, poor people in China, to participate where they couldn't afford to buy a meaningful amount of gold. They can't afford to buy a meaningful amount of silver. But it also happens because silver is traditionally more volatile. And people who are buying for one of the two primary investment motivations, the two are, of course, greed and fear. People who are buying from a greed point of view love the upside volatility in the silver market that occurs in the second half of precious metals bull markets. So the answer really depends on who you are. And I must admit, I'm of mixed minds. I believe that the set of circumstances that we see in front of us in the world today should cause anybody who is competent in arithmetic to be concerned about the purchasing power of their savings denominated in fiat currencies, be it the Australian dollar or the US dollar. So I'm attracted to gold. I'm attracted to gold stocks because, ironically, nobody likes them, and I always feel comfortable when I'm alone. But I like them too because, in the way that I value them, which is the net present value of future cash flows at today's commodity prices. That is to say, net present value relative to enterprise value, the market capitalization plus debt minus cash. These companies at current commodity prices, their cash flows are the cheapest that they've been in my career. So I think that the commodity is going to go up, and I think the commodity prices, producers are cheap. This is a wonderful circumstance for me. I find myself actually in the position where I own a reasonable amount of gold, a reasonable amount of gold stocks that I'm hoping the price goes lower because I'd like to buy more. And if there's an asset that you want, you'd like to see it cheaper as opposed to more expensive. That gets me an awful lot of hate in the comments on shows like yours. But I've always felt that the idea that something that I wanted to buy more of was becoming cheaper was a good thing. I have the courage of my convictions.
All right. Well, while we're talking about uranium, which may be more sought after in the future, there are some much needed metals now that companies are looking for. Now, I'm fresh off the back of the Melbourne Mining Club meeting last week, and the topics of conversation were that we need more copper and we need more nickel. And interestingly, they pointed out that gold and coking coal were probably their next two ones that the world needed more of. Tell me, does this back up your view, or do you have a different view that there are other minerals and metals that we need?
Yes and yes. I think almost no matter what we do, 5 years from now, we're going to be short of copper.
5 years?
Because over the last 20 years or 30 years, we haven't invested enough in copper exploration, copper development, copper mine construction. We're living off mines, Shay, that are long of tooth. They were discovered in the 50s and 60s, built in the 70s or 80s. Great big mines. Uh, Bingham Canyon in the US, 110 years old. Chuquicamata, 100 years old. Grasberg, 40 years old. I mean, the only newcomer on the block probably is Olympic Dam of big ones. What that means is that as a society, we are living on these wonderful old legacy mines, but mines that are peaking and beginning their inevitable decline. And we don't have very much in the weeds to back them up. So almost no matter what we do, other than having a recession or a depression, which kiboshes demand, we're going to have copper shortages in the next 5 years. Nickel is going to be an interesting topic. We have a reasonable supply of low quality, low price nickel from the Philippines and from Indonesia. But the environmental degradation that mining those laterites in tropical surroundings causes is becoming unacceptable, even in the Philippines and in Indonesia, where they formerly tolerated them. So with regards to nickel, what we're going to need, well, the cost of producing nickel is going to increase. The excitement you see in Australian equity markets and Canadian markets around a sulfide nickel deposit, a nickel deposit that isn't environmentally degrading and doesn't require as much energy to produce, will tell you something about what the industry thinks is going to happen to nickel prices and nickel demand in the next 5 years. The nickel rush in Western Australia, the incredible success of Chalice, a 30-fold run, tells you something about the fact that I'm not the only guy out there who's a sulfide nickel bull. The writing is on the wall for that. Rare earths are going to be interesting. The last time through for rare earths 10 years ago, I sort of laughed about it, missed a hell of a stock run, but it turns out I was right. Rare earths aren't that rare, Shay. The reason that they're suddenly in focus is really twofold. One, there's a nervousness that the Chinese will attempt to blockade access by Western fabricators from rare earths because they control so much rare earths production. So there's a geopolitical concern around rare earths. The second, though, the reason that the Chinese are able to do that is because they're such efficient producers. We haven't found rare earths because we haven't looked for them. We haven't looked for them because they've been too cheap. That's changing too. They're produced in far Western China in ways that have been catastrophically environmentally destructive. And the Chinese people and the Chinese government too now appear to be willing to mine in a much more responsible manner, which means that the Chinese cost competitive advantage begins to go away. That will mean that the Chinese won't need to embargo the West to see the price go up. They will just need to reflect the costs of mining the material responsibly. And I think over the next 5 years that you're going to see an increasing appetite for exploration around rare earths. We're going to find it too. It's going to take us a while because we haven't been looking for it for 30 years. We don't know where. We don't know how. We don't know who. But those are questions that are going to be answered because as we use more and more microcircuitry in an electric world, and the cost of producing this stuff in China goes up, and perhaps as geopolitical concerns around Chinese controls go up, the price of these rare earths, the price of all this stuff that I can't pronounce or spell, is going to go up. I'm actually, with my own money, buying some of this stuff now, physically. I don't know how to find it. I suspect it'll be selling for more later. It doesn't cost very much to store because it costs so much to buy. You can't store stuff like copper and aluminum too well, because the unit prices are too low. It doesn't store well economically. But there are several of these 4-syllable materials that sell for enough money relative to the size of the volume that you can buy them and store them, which is precisely what I'm doing with my own money, while I scramble like mad to learn more about the exploration processes and a little bit about the processing processes around rare earths. But I agree with your thesis. I think that the legitimate part of electrification, which is to say improving the living standards of the poorest 3 billion people on Earth, will drive demand for the electric economy. I think, too, the political trend and social trend that you've noted towards decarbonization will make vast amounts of money available, most of it to be wasted, misspent, but some of it to be spent intelligently. Every now and then somebody accidentally does the right thing in politics. And I think that the impact of that on the mining industry in general and the mining industry in Australia in particular, it's going to be very exciting. And it's going to be exciting for a long time, I think. We will be looking for cobalt deposits and nickel deposits and copper deposits, uranium deposits, rare earth deposits for a very long time. Will it bust eventually? Of course. But I suspect that we'll have a hell of a decade.